Morning, Steve Free in Chicago with the morning grain comments. Well, it's Friday and hope everybody has a nice and safe weekend. Overnight, grain prices are a little bit higher, led by the wheat. Market's trying to rebound from yesterday's sharp losses. Funds on Wednesday bought the market and they sold similar contracts on Thursday. I think the two headline news yesterday, number one, was NOAA came out with a 3-month U.S. Weather forecast, November, December, and January, that was calling for mostly above normal temps across most of the U.S. Rainfall will be the most in the PNW and along the Great Lakes. This caught the market by surprise because most private analysts are talking about a cold winter. So we had steep losses in the energy market, which had a rippling effect on corn and soybean oil, and a lower soybean oil market had an impact on the soybean futures. The wheat market kind of followed, and overnight it's trying to regain some of yesterday's losses. I think each market is different in its own fundamentals. The soybean market is struggling, rallying because of talk about the U.S. carryout because of higher crop and maybe lower exports. Could be 500 million bushels versus the government's 320. Over in the corn market, it's struggling to break out of a sideways trading range. I think support's underneath the market with end user buying, but above the market, we just don't see the data globally that would suggest higher prices, even though ethanol data and also export sales data suggests the carryout could be closer to 1,100 than the USDA's 1,500. And we're also looking at higher planting costs next year that could lower corn acres. And if bean prices keep dropping, we may need less bean acres. So what does that mean? More wheat, more oats, more barley acres. Also in the wheat market, we continue to see higher world prices. Most of the buyers in North Africa and the Middle East are short and need to buy wheat. And the talk is that Europe's export pace will slow and that Russian prices will move higher. And there is a quote in January of probably lower exports. Weather-wise, besides the NOAA numbers, its rains will be across the central Midwest over the next few days. The southern plains will be dry. Europe's drying out. Russia's dry. Argentina's dry. Southern Brazil is turning dry while the rest of the Brazil is okay. The other headline that we saw yesterday was talk that China's economy may be slowing, and that could reduce their import demand of commodities. Also, there was talk that maybe phase 2 deal between U.S. and China may be done and not happen. So it could turn China into a buyer of what they need rather than a deal that they make with the U.S. Export sales in beans and corn were very good yesterday, but I think the talk about the higher supply and maybe lower China demand tended to offset that. Today we're back talking about inflation, and it'll be time today and next week to decide, have we factored in all the bearish news, especially in the grains? Do we need to go lower, or does the outside markets take us higher, led by inflation? As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like yourself would like to be treated.